Hey everyone, me Kevin here. Let's clear up some FUD that's going on regarding Binance and what this means for the future of cryptocurrency. So you may have seen some kind of clickbaity headlines lately, such as Binance is getting shut down or banned in the United Kingdom. They look a lot like this: Binance crypto exchange ordered to cease UK activities. And in the Financial Times, we even see headlines or sections of the Financial Times that say things like this: as part of the regulatory action in the United Kingdom, Binance needs to display by next Wednesday on its website that Binance Markets Limited is not permitted to undertake any regulated activity in the United Kingdom. Now, when I read that, I'm like, wait a minute, what does regulated activity mean? And it's kind of important to ask those sorts of questions because regulated activity doesn't mean everything. Because, see, here's an article that actually tells us that trading cryptocurrencies, here we go, trading cryptocurrencies is not directly regulated in the United Kingdom, but other related activities, such as selling derivatives, do require approval. So, in other words, what's really happening here is the United Kingdom is withdrawing Binance's ability to offer options or potentially margin trading on cryptocurrencies in the United Kingdom. And as a result of this, they'll be required to display that notice on their website that, hey, we're not regulated to basically do those regulated activities here in the United Kingdom. Now, of course, immediately there are a lot of folks who like to post a picture of the Binance website, which currently says Binance. If you just go there, you could go there yourself, binance.co.uk. That's kind of like their .com, right? Binance.co.uk, you get Binance UK coming soon. Sign up to receive updates. So it seems like they're obviously revving up to provide services in the United Kingdom. The latest news is just that United Kingdom's regulators say, hey, well, we don't want cryptocurrencies to be trading with derivatives and margin in the United Kingdom, at least until we have certain regulatory measures in place. And the specific regulatory measures that everybody seems to be freaking out about has to do with fraud regulation and money laundering regulation, excuse me. Now, this is important. I think most people who are investing in cryptocurrency don't want cryptocurrency to be associated with fraud and money laundering and ransomware. But just because cryptocurrency is associated with those things sometimes, just like regular money is, oftentimes more often than cryptocurrency is, doesn't inherently make cryptocurrency bad. It's like just because criminals use Western Union doesn't mean that Western Union is a bad organization. It just means, okay, criminals use this and probably we gotta keep an eye on how to make sure that less criminals are able to use that, and that can call for more regulation. Now, usually in cryptocurrency, when we hear regulation, we think bad, but here's the take from Bloomberg. Take a look at this. Bloomberg reported the following: regulation is an undeniable growth driver, said the co-founder of the EXMO exchange, a UK-registered crypto exchange. I'm glad the Wild West phase for the crypto market is almost over. This is a really interesting argument. I mean, really what they're saying here is, hey, look, yeah, there have been issues with cryptocurrencies being associated with crime, and rooting those out by having a little bit more regulation could actually be a good thing, because the last thing you want is areas like, well, kind of what happened here, Ontario, Canada, just saying, hey, as part of our compliance efforts, the terms of use have been updated to basically say that Ontario for Binance has become a restricted jurisdiction, and regrettably, Binance can no longer continue to offer service to Ontario-based users. Right? This is the worst case scenario. The worst case scenario is that companies just leave. What you want is companies to say, hey, government, we want to work with you. We want to make sure we can root out crime while still having as many benefits of cryptocurrency as we can and still operating legally. Remember that when we use Coinbase or Gemini or BlockFi in the United States, these are heavily regulated already centralized crypto brokers. SoFi uses Coinbase, right? Coinbase, highly regulated, highly licensed. They got to get licenses in every state. And this has good things. It gives us as people, as investors, more confidence that, okay, we can invest and know that all of a sudden we're not just going to get the rug pulled out from us and the company we're investing with is going to get shut down. Now, some of us like that. Some of us like the idea of the government having zero control and power, and there's DeFi for that, right? Which is still pretty much Wild West-ish. But there's some really important bottom lines that we got to think about when it comes to what happened here in this news. And I'm going to break those out Very simply. So number one, okay, we're going to draw these out. Number one, more regulation in a good way, more regulation to combat crime. So we'll write down to combat crime. And the reason we're going to say this is because we don't want more regulation that just makes our lives miserable or makes it harder for us to use cryptocurrencies, right? That's not what we want. But more regulation to combat crime is not necessarily a bad thing. In fact, what does that usually lead to? Well, that's likely going to lead to companies like JP Morgan being able to offer crypto services to their clients. In fact, JP Morgan already uses something called the JP Morgan coin to transact over $1 billion a day in their treasuries trades overnight. They're literally already using something called a JPM coin. And this is, guess what? An Ethereum-backed or Ethereum-based coin. So like banks already have clients wanting to use this. Banks are just looking for guidance in terms of, okay, how can we prove to our clients that we're getting them into something that at least has some level of security, if you will? Now, I know there's a big balance with that because, again, people are like, no, we don't want any government involvement. That's fine. But this is what happens when you have absolutely zero government involvement. Take a look at this, and this is the second problem. So you get this right here. This is a crypto regulation or crypto assets disclaimer by the regulatory agencies in the United Kingdom. And something that they mention here is that crypto, look at how they're wording this. I mean, it's intense, okay? Crypto assets are considered very high risk and speculative investments. If you buy these crypto assets, you're unlikely to have access to the FOS or the FSCS, which are basically agencies that protect you if like your broker goes underwater. Think of it kind of like SIPC insurance or FDIC insurance, right? These sorts of guarantees, then regulatory agencies that we have here in the United States so that in the event something goes wrong, we have those to go to. We don't have those for cryptos here. And they're making this clear in the United Kingdom that in the United Kingdom, they don't either. But guess what happens? If we have more regulation that starts combating potentially just the crime aspect that really is, I think, overstated. It's really overblown anyway. But if we get a little bit more safeguards in terms of anti-money laundering safeguards or the ability for us to snatch back ransomware payments, which is kind of what the FBI did when they traced Bitcoin, the Bitcoin ransomware payments from the Colonial Pipeline. Guess what ends up happening when we have more regulation to combat crime? Well, the second thing that happens, and this is actually really big, is you end up getting more customers. You end up getting more investors or people who today are really fearful of cryptocurrency saying, okay, so this is part of a diversified portfolio. Okay, I'm starting to warm up to it. You warm up with Bitcoin, then maybe you go into the Ether, and then maybe you go into ADA or something like that. And maybe you go over to BlockFi and you deposit some of your crypto coins and you get up to $250 for free by going to metkevin.com/BF. You could do all those things. But the point is, this regulation FUD that we're seeing right now is actually a very natural evolution for a new investment vehicle. This is normal what we're going through, and it's not a bad thing. If anything, it's a good thing. So that said, it's very important to remember that this eliminating of the Wild West, so to speak, just like the other crypto broker mentioned, they mentioned it themselves. This isn't Kevin saying it, right? Important to remember that. The more customers we end up getting. Take a look at this. This is a pretty cool chart here. Crypto plans. Some banks are starting to offer crypto services. Blue is yes, orange is no, and gray is considering. Look at this. JP Morgan Chase already does crypto futures. Goldman Sachs, Morgan Stanley, they're already doing futures. Bank of America already doing it. You've got considering at JP Morgan crypto products for wealth clients. So basically the rich folks, hey, Goldman and JP Morgan want to stay competitive. Citigroup's thinking about it. Morgan Stanley's already doing it. Now, so far they've gotten into no on doing crypto custody accounts, which is generally what like Coinbase or Gemini you're going to do anyway. So most of them have argued that probably no on this, fine. But the point is, this is as of June 18th here from Bloomberg. This is good. We want more of this. And look at Binance's activity here, folks, because remember, even with this partial Binance ban in the United Kingdom, you're still going to be able to buy or sell crypto in the United Kingdom using Binance. And look at the activity, folks. We thought activity would go down as price fell, and well, kind of so far we have seen activity go down. This right here would be May. So we are seeing crypto volumes sort of decline here, but look at this insane run here of monthly crypto volumes in US dollar equivalent. This, by the way, a little bit of a red flag right here for like Coinbase investors, right? If crypto volumes go down, that means trading revenues go down at Coinbase, which is not going to be too good for Coinbase. So keep that in mind. But overall, we're seeing, I mean, compared to last year, look at the chart. It's undeniable the growth of crypto volume we're having, and it's a really good thing. So in my opinion, this Binance FUD is actually very good for the future of the crypto industry. It's going to lead to more proper and limited licensing and regulation, which is good. It's going to lead to likely more customers in the crypto space, which is good. And ultimately, more customers in the crypto space means better and safer offerings, better and safer options, and ultimately, higher price for cryptocurrencies. So for me, I bought some more cryptocurrency at yesterday's dip. As usual, I send an alert to all of those folks in the Stocks and Psychology of Money group, link down below where you can invest and see exactly what I'm investing and what I'm buying and selling. Every time I make a buy or sell transaction, I post that. You can also check out the other programs, and always remember to use that 40% off coupon code that does expire in 4 days. Thanks for watching, and folks, we'll see you in the next one.